Good morning to members of the Centric Super Fund. My name is Catherine Robson and I'm Chair of Equity Trustees Superannuation Limited, ETSL, the trustee of the fund. On behalf of the trustee board and the senior management team, I'd like to welcome you to the Centric Super Fund's annual member meeting for the year ended 30 June 2025. Firstly, I'd like to acknowledge the traditional owners of the lands on which we meet today and pay respects to elders past and present. Before we commence the formal part of the proceedings, I'd like to run through a few housekeeping items regarding today's online meeting. We've scheduled a question and answer session as the last item on the agenda. We've already received questions from some members and we'll be answering those during the meeting. If you have other questions, please submit these during the meeting. To do this, click on the live Q&A button located on the right-hand side of your screen and start typing your question. The answers to all questions, along with the minutes of this meeting and the recording, will be available on the Fund's website in the coming weeks. It's important to note that we cannot answer any questions that relate to your personal circumstances in this meeting due to privacy constraints. In this instance, we encourage you to contact the Fund. This meeting is being recorded, so if you have any technical issues or cannot stay for the entire meeting, please note that a full recording will be made available to all members within 4 weeks of the meeting on the Fund's website. And finally, information provided in this meeting is of a general nature only and does not consider your personal objectives or take into account your financial situation. If you need assistance, you should either contact the Fund or seek advice from a licensed financial advisor. You can also refer to the product disclosure statement and your most recent annual member statement for further product-related information. Please contact the Fund directly should you need a copy of any of these documents. Today's agenda has the meeting scheduled to run for about 45 minutes. In attendance, we have a quorum of our directors from the trustee board, along with David Warren, the General Manager of Superannuation Services from Equity Trustees, as well as Martin Morris, the head of Centric from Centric Capital, as the promoter of the fund, and Adam Cusio from Deloitte Australia, the fund's auditor. The agenda for the meeting includes my opening remarks, after which you'll hear from Martin, who'll provide an overview of the fund and key achievements over the year. David Warren will then cover the trustees' review of the fund, the findings of the most recent outcomes assessment, and a perspective on the investment market's performance and outlook. David will then hand back to Martin, who will share some of the planned future priorities and initiatives for the fund. The board, auditor, and presenters will then take some member questions and provide answers. Now we'd like to share some important updates on supervisory and compliance developments that impact trustees and members across the superannuation industry. The Financial Accountability Regime, or FAR, which began in March 2025, strengthens how trustees, directors, and senior executives are held responsible for their actions. It sets clear standards for governance and conduct so that your fund is managed with strong oversight and transparency. This helps ensure that decisions are made with care and always with members' interests in mind. Another new prudential standard called CPS 230 began in July 2025. It focuses on improving how funds manage operational risk and maintain strong business operations. It also strengthens how we manage third-party service providers, helping to keep services reliable for your information and keep your information safe. This helps your fund continue to operate effectively and protect your information and savings, even when challenges occur. I would now like to provide an update on the licence conditions imposed by APRA. On the 18th of December 2025, APRA imposed licence conditions on ETSL, the Registered Superannuation Entity Licence. The full media release is available on APRA's website. Importantly, the changes to the licence conditions will not impact member services. However, it will impact how new investment options are offered on the platform. Whilst we're working to meet these new licence conditions, there will be an initial delay for the approval of some new investment options on the platform over the next few months. We are, of course, supportive of anything that aims to protect member interests and any initiatives to strengthen governance frameworks across the industry. For our part, ETSL has already been undertaking a planned uplift in investment governance, which is aligned with APRA's new requirements. I would now like to move to regulatory changes which occurred over the year, beginning with the key rates and thresholds that define our superannuation system. From 1 July 2025, the superannuation guarantee reached 12%, completing the final scheduled step of the program that began several years ago. This means that for salary and wages earned from the 1st of July 2025, employers are required to contribute 12% of ordinary time earnings to super. At the same time, the concessional contribution cap remains at $30,000 and non-concessional cap is $120,000. The bring forward limit is $360,000 on eligibility. The general transfer balance cap also increased to $2 million from the 1st of July 2025. For members starting their first retirement income stream after that date, the personal cap is $2 million. For members already receiving an income stream, proportional indexation applies based on how much of the previous cap has already been used. Whilst we don't expect to see the superannuation guarantee increase in coming years, these other figures I've mentioned are adjusted annually to ensure that superannuation limits stay in step with inflation. Further, these measures all contribute to the purpose of superannuation, which was enshrined in legislation in November 2024 to preserve savings to deliver income for a dignified retirement alongside government support in an equitable and sustainable way. One of the most positive social developments in recent years is the introduction of superannuation on government-funded paid parental leave. As of the 1st of July 2025, eligible parents will receive a 12% superannuation contribution paid into their nominated fund. The Australian Tax Office will pay these contributions as a lump sum after the end of the financial year in which the leave was taken. This initiative helps close the gap in super balances between men and women and supports parents who take time away from work to raise their families. Turning now to tax settings for very large balances, the government's original plan was to introduce a 30% tax on earnings associated with balances over $3 million from the 1st of July. However, in October 2025, the government announced changes to that approach. The revised proposal would apply to realised gains only, rather than unrealised gains, and would introduce a tiered rate of 30% for the portion of balances between $3 and $10 million and 40% for balances above $10 million. It's proposed that these thresholds will be indexed, and the proposed start date is now the 1st of July 2026. The measure has not yet been legislated, and we will keep members informed once the law is finalised. Another area of focus this year has been payday super. Currently, most employers pay super contributions quarterly, meaning that employees potentially miss out on super returns in the period between payday and the end of the quarter. Payday super will require employers to contribute to super every pay cycle, with contributions expected to reach funds within a few days of payday. Draft legislation was released in March 2025, and the current plan is to commence from the 1st of July 2026, subject to the bill being passed by Parliament. The Australian Tax Office has published implementation guidance to help employers and funds prepare. These reforms aim to reduce unpaid super and give employees faster visibility of their contributions. As we look beyond these figures, the focus is on helping members move smoothly into retirement. The Retirement Income Covenant, which came into effect in 2022, continues to inform the way trustees support members in retirement. Each fund must maintain a clear strategy to help members balance income, risk, and flexibility in retirement. Our fund continues to refine its retirement income strategy and expand the tools, resources, and advice pathways that help members plan with confidence. In addition to the retirement income covenant, the government's other key area of focus is on service standards, after it came to light that a number of super funds were not meeting community expectations around timeliness of death benefit and insurance claims. As a result, the government has announced that it will introduce mandatory service standards for APRA-regulated super funds. These standards will set clear expectations around how funds handle the key member services, particularly the timely and compassionate processing of death benefits, the fair and efficient handling of insurance claims, and the delivery of clear, respectful, and accessible communication to members and their families. Whilst it may take a number of years before these standards become law, the expectation is clear. Superannuation is more than an investment vehicle, and members should be able to expect quality service from their fund. At a system level, cybersecurity continues to be a key area of focus across the superannuation sector. Super funds hold sensitive personal and financial information, which makes them an attractive target for cybercrime. Across the industry, trustees are expected to maintain strong governance, controls, and incident response arrangements to protect member data and assets. Regulators such as APRA and ASIC continue to emphasise the importance of cyber resilience, including system security, third-party risk management, and clear communication with members if incidents occur. Members also play an important role by protecting their own information, using secure passwords, and remaining alert to scams and impersonation attempts. Alongside cybersecurity, artificial intelligence is increasingly being discussed across the financial services industry, including superannuation. At an industry level, AI is generally viewed as a tool that can assist with data analysis, operational efficiency, and member communications when used appropriately and responsibly. Regulators have made it clear that the use of AI does not remove trustee accountability, and that decisions affecting members must remain fair, explainable, and compliant with the law. As this area continues to evolve, trustees are expected to apply strong governance and risk management to any use of advanced technologies. It is also important to recognise the broader picture of consolidation and growth across the industry. As of June 2025, total Australian superannuation assets reached approximately $4.3 trillion, with around $3 trillion held in APRA-regulated funds, such as your fund. The industry continues to merge and consolidate to achieve greater efficiency and scale, which brings benefits for members through reduced costs and improved investment opportunities, while also increasing expectations for governance and service. Before closing, I would like to remind all members to take time to regularly review your super. Check your balance, your insurance cover, and your investment settings. If you're planning parental leave, make sure your fund details are up to date. And if you have or expect to reach one of the new proposed thresholds in the future, consider how the proposed tax changes might affect you. For personalised guidance, please contact the fund or seek professional financial advice from a licensed advisor or tax specialist. This year is about building fairness, improving integrity, and lifting service for members. The higher superannuation guarantee, the introduction of super on paid parental leave, and an evolving retirement system is designed to give you confidence and control. Thank you for joining us today. I'll now hand over to Martin Morris, Head of Centric from Centric Capital, for further information about the fund. Thanks, Martin.
Thank you, Catherine, for that update. I'd like to now take a moment to give you a brief overview of the fund and highlight some of the key initiatives we've delivered over the past year to enhance the experience for our members and advisors. Centric Super provides a highly competitive and value for money superannuation and pension offering to members in conjunction with their nominated financial advisor. Our platform combines an engaging user interface with a robust technology feature set, delivering investment control and flexibility to both members and their advisors. The fund is member-directed, giving members significant scope to invest across cash, term deposits, managed funds, and ASX-listed investments tailored to your individual risk appetites. We offer accumulation, transition to retirement, and account-based pension products across two distinct investment menus. As at June 2025, the fund had over 9,000 members and more than 4 billion in funds under administration. The Centric Choice menu provides rich functionality and access to a broad investment universe, enabling members to blend investment styles, asset allocations, and underlying investments to suit their personal requirements. In addition, the Centric One menu offers a simpler investment universe through professionally constructed and managed models designed for members with lower balances. Through our global scale, our administration and custody partner, FNZ, the fund delivers a menu offering high functionality. Our focus remains in servicing the needs of advised clients while always being mindful of the impact of fees on varying balance sizes. We've constructed investment menus that deliver value for money for all members, regardless of their balance. The fund is supported by Centric Capital as promoter, an investment services provider, and FNZ Australia as administrator and custodian. While we work collaboratively with the trustee, we recognise that the trustee is an independent organisation acting solely on your behalf to ensure we provide quality service at a reasonable price. Building on this strong foundation, we've made a number of improvements this year to enhance your experience and help you achieve better outcomes. Behind the scenes, we've strengthened the stability of our platform through technology upgrades, and this means more reliable experience for you today and the ability to deliver even more enhancements in the future. We introduced new functionality to manage your ongoing fee arrangements with your advisor, simpler and more transparent, giving you greater clarity and control. For members in legacy retirement products, we've increased flexibility to ensure your retirement strategy remains aligned for your needs. These changes were implemented in step with recent regulatory developments and reflect our broader commitment to provide options that are both compliant and genuinely supportive of your goals. We also enhanced our client service capabilities so your advisor can access information they need quickly, resolve issues faster, helping you get answers and solutions without delay. At the same time, we've dedicated additional resources within our operations team to support advisors in implementing strategies efficiently, meaning smoother processes and a better overall experience for our members. Finally, our research team expanded the investment menu, giving you and your advisor more choice to tailor your portfolio to your goals. Our research team is highly qualified and ensure through due diligence and strict adherence to governance standards are absorbed when adding investments to our menu. These initiatives reflect our ongoing commitment to stability, flexibility, and the choice and always the goal of helping you achieve your best financial outcomes. I'll now hand over to David Warren, who will share the trustee's review of the fund.
Thanks, Martin, for the fund update and importantly, for the achievements and benefits delivered for members in the past year. And now I will provide the trustee's review of the fund and the outcomes achieved for members over the last year. Starting with the retirement income covenant, this continues to guide how funds support members who are moving into retirement. In June 2025, APRA and ASIC collected data on the retirement phase, and they are now encouraging funds to take faster action to make sure members are well supported as they retire. The covenant requires funds to help members maximise their expected retirement income so they can have the highest possible income throughout retirement, to also help members manage risks to the sustainability and stability of their income, including the risk of outliving their savings or changes in the market, and also to provide flexible access to funds so members can choose how and when to use their money during retirement. The introduction of the retirement covenant aims to help funds better understand members' retirement needs. It also helps members plan, prepare, and feel more confident about their retirement. As part of meeting this covenant, your fund has published a retirement income strategy, and we encourage all members to read it and to understand how it can support you in preparing for retirement. Over time, the fund will make available tools, resources, and support to help you identify your retirement needs and know where to find help. This may include educational materials, reminders to review your super at key milestone birthdays, or professional advice for a more detailed plan. Everyone's idea of retirement is different. Living your ideal lifestyle in retirement requires planning. Taking time to plan can make a big difference in helping you feel confident and financially ready for your retirement. Before we get into the details of how different markets performed over the past year, it's important to note that you or your financial advisor would have elected how your superannuation is invested in the fund based on your risk profile. The fund offers a comprehensive investment menu with many investment options. This is a general update on investment performance overall for the superannuation industry. I want to take a moment to remind everyone that super is a long-term investment. For most members, it's an investment that can stretch over 40 years or more, from the time contributions begin to when retirement income is drawn. While it's important to look at what has happened in markets over the last financial year, because this is, after all, an annual members meeting, the real focus should always be on the long-term picture. 1 year is just a small part of your total superannuation journey. Over the 2025 financial year, both global and Australian markets delivered strong results, despite ongoing economic uncertainty and fluctuating investor sentiment. The year highlighted the importance of resilience, diversification, and a long-term approach to investing. Moving on to looking at individual asset sectors, Australian shares performed well, returning 13.8% for the year. The result was supported by strength in the resources and energy sectors, which benefited from steady global demand and solid commodity prices. There were periods of volatility early in the year as global growth concerns weighed on sentiment, but confidence improved in the second half, helping to lift overall returns. International shares delivered an impressive 18.6% gain. The United States led global markets, supported by strong corporate earnings in technology and related sectors. Europe experienced more modest results, while emerging markets were mixed due to currency weakness and slower growth in several regions. These differences across markets highlight the value of maintaining a globally diversified portfolio. The Australian listed property sector returned 13.8% for the year. Industrial property remained a key driver of performance, supported by demand from logistics and e-commerce. Retail property also showed improvement, helped by stabilising consumer spending and easing cost pressures. The sector benefited from both yield compression and stronger rental growth. Australian fixed interest returned 6.8% over the year. The environment remained challenging as interest rates stayed high for most of the period. The Reserve Bank of Australia maintained a firm stance to keep inflation under control. Toward the end of the financial year, expectations of future rate cuts helped support bond prices, resulting in a modest positive return. And cash investments provided stable and predictable returns of 4.2% for the year. With interest rates at the highest levels in several years, cash continued to play an important role as a defensive and low volatility asset within diversified portfolios. The results across asset classes this year remind us that markets move in cycles. Some sectors will lead while others lag, but together they demonstrate the benefit of diversification. A well-constructed portfolio spreads risk and helps investors stay on track through different market conditions. All investments, though, carry some level of risk, and it's important to understand your own risk profile and how much fluctuation you are comfortable with. The trustee continues to provide a broad range of investment options, allowing members to choose the level of risk and return potential that best suits your personal circumstances. Looking at the Centric 1 model performance, specifically for Centric Super, the fund's flagship pre-mixed investment option is the Centric 1 balanced model. This option delivered a return of 10.0% over 1 year to 30 June 2025, outperforming its CPI-linked benchmark by 5.9% for the financial year. All of the Centric 1 models delivered strong absolute returns and outperformance relative to their CPI-linked benchmarks across the entire range of risk profiles. The average outperformance for the models was 5.8% and ranged from 4.4% to 6.8%. The strong results highlight our commitment to delivering consistent long-term value for Centric Super members. So looking at the outlook, what's the outlook for the investment market? Well, looking ahead, the main forces likely to shape financial markets over the coming year are inflation, interest rates, economic growth expectations, and geopolitical developments. Domestic monetary policy remains in focus. The Reserve Bank of Australia, or the RBA, is walking a careful line between supporting economic activity and keeping inflation under control. That said, the global environment is layered with uncertainties, from trade policy frictions and conflict in the Middle East and Eastern Europe to potential shifts in US domestic and foreign policy. Elevated global geopolitical risk remains a major wildcard. Investment markets generally dislike uncertainty, and this means we should expect periods of increased volatility and the possibility of muted returns. Having considered the broader investment market environment, we will now turn to member outcomes and how the fund has performed in practice. So looking at member outcomes, each year we complete a member outcomes assessment to provide transparency on how the fund's products are performing and whether they continue to operate in members' best interests. The last assessment was completed in 2024, and we are currently finalising the 2025 member outcomes for the fund. The member outcome assessments consider a broad range of product attributes, including investment risk and return, fees and costs, insurance claims management, member engagement, scale, and an overall product assessment rating. Using a rating scale, the assessments provide the trustee's perspective on how each product compares with similar products in the market. And all the current assessments are published on the fund's website to ensure transparency and to support members in understanding their superannuation arrangements. During the most recent review period, the trustee completed a total of 13 assessments across 3 products. From the trustee's perspective, these assessments provide an important opportunity to evaluate the sustainability of the fund and the outcomes being achieved for members. For members, the assessments offer relevant information to consider in relation to their superannuation savings. All assessed outcomes were determined to be within tolerance and to be promoting the financial interests of members. Where appropriate, the assessment process also allows the trustee to identify areas where performance could be improved and to consider remediation actions. Based on the results of the assessments undertaken, the trustee considers that the fund continues to be suitable for members. While the trustee and Centric perform different roles, the partnership is underpinned by a shared alignment in serving members and delivering the best possible retirement outcomes. And I'll now hand back to Martin, who will share an update on what we can expect in the year ahead for Centric Super, and then we'll finish off with some questions and answers. Over to you, Martin.
Thanks, David. As we look ahead, Centric, together with our partners, will be making a significant investment in uplifting our platform. This investment will build on our strong foundation and modernise the existing platform to ensure our capabilities continue to align with your expectation as members. It's not just about consistency and an intuitive digital experience. This uplift will position Centric to deliver innovative updates well into the future by leveraging the global scale and resources of our technology partners. We're genuinely excited about what's to come, and we'll make sure you and your advisors are kept well informed of these as these enhancements rolls out. Thank you, and it's been my pleasure presenting to you, and I'd like to hand back to David.
Thanks, Martin. We'll now move into the question and answer session, and this is an opportunity to address some of the common questions we receive from members, covering topics such as investment markets, risk management, and how the trustee supports members in key areas. Please note that we're unable to answer questions related to a member's personal account details or circumstances for privacy reasons. So let me read the first question. Does the Shield and First Guardian matters impact our fund? And thanks for that question. We understand reading about situations like the Shield and First Guardian can create concerns, but there is no impact to your fund, the day-to-day operations or the services we provide to you as the trustee of the fund. We appreciate this situation has been deeply challenging for those affected. We have clear ideas for regulatory reform, and we are working with the key industry bodies and the regulators. We are respectful of the ongoing regulatory examination of the issues, and we remain deeply committed to supporting them to have robust confidence in the superannuation system. The ETSL board is committed to acting in the members' best financial interests and takes its compliance obligations seriously. Okay, next question. What is the trustees' view on the investment market outlook given growing global uncertainty? Investment markets continue to operate in an environment influenced by economic uncertainty, inflation and interest rate changes, geopolitical tensions and ongoing technological change. And these factors can contribute to periods of heightened volatility and short-term fluctuations in asset prices. The trustee acknowledges that uncertainty is a normal feature of investment markets and that outcomes cannot be predicted with certainty. Superannuation is typically a long-term investment, often spanning decades. And while short-term market movements can affect account balances from time to time, the trustee's approach is designed to support members' long-term retirement outcomes rather than react to day-to-day market changes. And this involves offering a range of investment options with different risk and return characteristics and maintaining diversified portfolios across asset classes, regions, and sectors. Again, members are encouraged to consider their individual circumstances and to seek professional financial advice if they're unsure. Okay, next question. What's the trustee doing to ensure that claims are managed and paid efficiently for members? And this has been a topic that's been central around the industry over the last 12 months. The trustee places a strong emphasis on the fair, timely, and consistent management of claims. Claims processes are designed to operate in accordance with the relevant trustee, policy terms, and legal and regulatory requirements, while also recognising the importance of clear communication with members throughout the process. The trustee oversees claims governance and works with administrators, insurers, and service providers to support efficient claims assessment and decision-making. Performance and service standards are monitored and processes are reviewed periodically to identify opportunities for improvement. And we have time for one more question. How does the trustee view speculative investments such as gold, silver, and emerging technologies such as AI? And what steps does the trustee take to manage and limit exposures to these types of investments? So the trustee recognises that assets often described as speculative, such as certain commodities or emerging technology-related investments, can play a role within diversified portfolios, but they also carry higher levels of uncertainty and volatility. These investments can be sensitive to market sentiment, valuation changes, and rapid shifts in economic or regulatory conditions. The trustee has limits on the percentage of a portfolio that can be allocated to a single investment or asset class in order to provide some measure of protection to members. However, true protection comes from a properly constructed and diversified portfolio. Members are encouraged to consider their individual time horizon, risk tolerance, and retirement goals when choosing investment options and to seek professional financial advice if they're unsure. That's all the questions we will answer today. We have received some other questions from members on their personal circumstances and accounts, and Centric will contact these members directly to assist. To those members who have submitted questions, the board would like to thank you, and we will note all responses in the minutes following the meeting. And I'll now hand back to our chair, Catherine, to wrap up today's proceedings.
Thank you for your time and attendance today. We hope that you found this meeting useful and informative. A video of this meeting minutes, and written responses to all questions raised, including those which we have not responded to today, will be available on the Fund's website within 4 weeks of this meeting. Thank you and wishing you a wonderful day. Goodbye.